Good day, greetings. Welcome to our preparation for the September test. And if you're new here, please follow and like my channel as I try to help you guys in preparation for your tests, your exams, and anything in between. Hit me a comment in the commenting section should you have a question later on. So really, when preparing for the September test, your term 3 test, what they would usually test or normally test is your understanding of financial statements, whether it's your income statement, it is your statement of financial position, or it is your statement of changes in equity. Sometimes it could be cash flows, but rarely cash flows. It is really between these three papers or these three statements. You need to know your statements like the back of your hand. And then next, they would then test your ability to analyze and interpret financial statements. So that is basically your ratio calculations. You need to know your ratios at this stage, grade 10s. You need to know what goes into each ratio and what each ratio means for the company. And then finally, it is also commenting on those ratios. You need to analyze and interpret. So you need to know what each ratio affects when it is, for an example, 0.5:1. What does that mean for the company? And it'll usually be out of 100 marks, give or take 120, should it be more or less. So for today, I'm gonna take you through a September paper that we're gonna do that comprises of the three things I've just outlined. As you can see on the screen, it has the statement of the income statement analysis, it has the ratio calculations, and it has commenting. All right, let's get into it. So question 1, 60 marks, 54 minutes. Guys, try to keep to your time limit. Always time yourself. Once 54 minutes have reached, you move on. You go to the next question. Because if you try to continue, then you won't finish. Just try by all means to just move on all the time. So now we're given information of Agreezy traders for the financial year ending 28 February 2019. That is important, knowing your year end. When does the year start? If it ends on the 28th of Feb, it starts on the 1st of March 2018. The business is owned by Olani, and we're required to prepare the income statement and calculate the missing figures in the tangible or fixed asset note. So we have 17 marks of that. Okay, right. Let's go through our income statement. So we are given a pre-adjustment trial balance of Agreezy on 28 February. What does that mean? If we're given a pre-adjustment, it means that there are certain adjustments that we would have to make. We are given our nominal and our balance sheet accounts. Nominal accounts normally include the income statement accounts. Balance sheet accounts normally include the statement of financial position accounts. So as you can see, we have our sales, cost of sales, debtors, allowances, salaries and wages, thereon and thereforth, up until interest on fixed deposit. So from this, we can just take these amounts and transfer them over to our income statement before looking at our additional information. Let me just do that quickly. Okay, there we go. So I've included our amounts. So a hack, guys, on what to, if you do not know, or if you're struggling to know which amounts go on the income section and which amounts go on the expenses section. So generally, when you're given a trial balance, the credit amounts under your nominal section come up here onto your income section, and your debit amounts go to your expenses. So your debits are your expenses, your credits are your incomes. That's how it is. That's a cheat. Sometimes it works, but you need to be subjective when it comes to that. And that would mostly affect your cost of sales. But generally, you know, cost of sales is an expense, so it's supposed to be a debit amount. Sales is an income, so it's supposed to be a credit amount. Let's look at our additional information. So additional information 1, received a first and final dividend of 40 cents in the rand from the insolvent estate of Espagati, a debtor who owed 1,600. The remainder must be written off. So we received 40 cents from this account of 1,600. Means that 60 cents of this 1,600 has gone bad. Thus, they're saying the remainder must be written off. Then what does that do? It increases our bad debts. So we have to increase our bad debts by the 60 cents of this 1,600. Here we go. 60% of 1,600. That is 960. Therefore, that concludes our bad debts amount and makes it 17,600 plus by 960. And that gives us 18,560. Then we're done with the first additional information. Go to the second. It says the telephone account for February 2019 was still outstanding. So we are still owing 1,830 at year end. So this amount falls into the current year of assessment. Therefore, it means we have to increase our telephone amount by 1,800. So here we would have to add 1,830, and that would give us 42,900 plus 1,830. That would be 44,730. Then we're done with the second adjustment, and then we're told the rent for March has already been received. The rent was increased by 600 Rand per month with effect from the 1st of January 2019. So we already received rent for March. So this rental income of 66,800 is overstated. We currently don't know how much we pay per month, but we know that the rent increased by 600 Rand per month from the 1st of Jan. Let's do a calculation quickly. So we will have to know the total increase. So it is going to be 600 Rand. It increased on the 1st of March. So it means we paid January rent, February rent, and March rent. So it's for 3 months. That equals 1,800. So it means out of the total rental income, 1,800 is the increase, which is the 3-month increase. Okay, now that we know this increase, we're gonna take it out from our rent income. 66,800 less 1,800, so that we can know the total amount without the increase. Less 1,800, which is 65. It's 65,000. This 65 is the total amount received for the 13 months, because March is included. So we divide this by 13 in order to find our monthly rent. And our monthly rent is 5,000 Rand. So what does that mean for us? It means that our rent income is overstated by 5,600, which includes the 5,000, which is the normal rent, and the 600 Rand increase. So we would have to decrease our rent income by 5,600. Guys, these transactions are really repetitive. So once you get the principle correct the first time, trust me, they cannot confuse you any further. This transaction was just set here to confuse you. But once you know what to do or the steps to follow, then they cannot confuse you any further. So it means our rental income is supposed to be, there's 5,600, supposed to be 61,200. 61,200. Okay, then we move on to the next. It says that the loan statement received reflected the following: the balance on the 1st of March 2018, repayments, interest capitalized, the balance, the closing balance. Therefore, we need to calculate our interest on loan, our interest expense. So we have the closing amount, we have the opening, we have the repayments, and we have interest capitalized. So what does interest do? It increases our loan amount. It increases our loan amount. So generally, this would have been 300,000 less 92 plus this X is going to give us 236. And if you put that down into a formula or on the paper and work it backwards, it means we want to find the value of X. So this is what you would do. You would say that it's 300,000 plus 92,400 minus X, which is the value we do not have, is going to be equal to this 234,600. Okay, 234,600. Okay, now it's just a matter of solving for X. And when you solve for X, it's going to be, you're just going to take this X, bring it this side, take this 234, bring it the other side. So it's going to be 300,000 plus 92 less 234, and you will get your X amount. And if you do so, you get an amount of 157,800, which is our rent expense. But wait, did you see the trick there? We made a mistake. This is supposed to be a subtraction because these are repayments. Then that will alter your interest expense and give it the value of 27,000. Therefore, we come here and replace that amount of 27,000. Now this is a subtraction, so you'd have to put it in brackets. Let me just put them. Let me put the brackets. There we go. And then we're done. Then we're moving on. Transaction 5 says that we need to provide for the outstanding interest. Okay, no, transaction 5, not 6. It says that insurance includes an amount of 1,920 paid for the period 1 January 2019 to 30 June 2019. Let's go to our insurance amount. So included is 1,920, which was for 6 months, 1 Jan till 30 June. But we only want 2 months, which is Jan and Feb, of that 1,920, which is what has accrued to us. It is what we are entitled to at this current moment. The rest would become income received in advance. But we're not dealing with the statement of financial position at this point. But you have to think of the other effects, should there be any. So it means we were going to have to reduce our insurance amount. We're going to have to reduce it by how much? just change my ink color there. There we go. We're gonna have to reduce it. What we want is 2 months. What we know is 6 months of this 1920. And that will give you a value of 1000. It gives you a value of 640. Means from this insurance we are reducing 640. Therefore 25,000 less 640 gives us 24,360. Then we're done with that. Then we're told to provide for the outstanding interest on the fixed deposit. Okay, let's go to our fixed deposit then. We have a fixed deposit, there it is, with Sitatu Bank at 8% per annum. It means that we have not yet received interest income on the fixed deposit. I see there is a line item here on interest income and I had already included one. So you can just remove this and just place it there. So it means we have not received our interest for this year. This means that we were going to have to increase our interest income by how much? We're going to have to increase it by 8% of the 48,000. So we're supposed to increase our interest income. But then here's the trick. Our total interest income receivable is 8% of our fixed deposit, which is 8% of 48,000 is 3,840. But of that 3,840, we've received 1,600. So of this, we are supposed to remove the amount that we received, less this 1,600. And then our addition will be 2,240, which then gives us the total interest income receivable of 3,840. Then we're done with that, okay? And then we're told there was a fire in the business on 28 February 2019. Merchandise was damaged. The insurance company has agreed to pay only 80% of the claim. Their settlement check of 12,800 will be received during March. No entries have been made yet. So now looking at the goods that were on fire or that were damaged due to fire, we're told that the insurance company has agreed to pay only 80% of the claim as the goods were underinsured. Their settlement check of 12,800 will be received during March. And if we should go and look at the trial balance, we're not told of any merchandise here. So we don't have any information on what the cost actually of this merchandise was. But then we are given a hint to say that the insurance company has agreed to pay only 80% of this claim. It means that this 12,800 is 80% of the total claim. So I'm just going to come here and add my loss due to fire. Okay. Due to damage. Now, in order to find what the original cost is, we know that what we know is 80%. What we want is 100% of the claim. And how much is the claim? It is 12,800. And if you do that, you will get an amount of 16,000. So that is the total value of the claim. But we're only going to be able to get 12,800. That means the difference is now the loss. Which is 3,200. Okay. And then the last, we're told stock on hand was as follows: trading stock of 71,000. But what does our trial balance say? It says our trading stock is 88,000. There's a deficit. Our trading stock deficit 88,000 less 71,000. It's 8871. Yes, 88 less 71 gives us 17,000. Then we have packing material of 950. At beginning we had packing material worth 40,000. Let's look at this again. Yes, 40,000, and now it's 950. Means we used up quite a huge amount. And that will give us 39,050. Okay. And then we're not told anything else, so I assume we are done with the income statement. So the rest you can then put back there, and do your additions and subtractions and get your net profit for the year. Moving on, we will go to the second part of the question, 1.2.